running, my largest holding. So I'm having a good time getting some good tweets out there, in my opinion, at least.
Been a
Yeah,
while
it's
since
a,
Apple's had a 10% week.
I know it feels weird, dude. And like, I have a lot of thoughts on the long term for it, but in the short term, like I know a case just came out, and the Epic Games ruling, I think that just came out, was the cause for the recent spike. But I don't really know what the reason for this last week or so has been. But we'll see.
Well, today
well,
a bit of the bounce today was from the AR VR news, right?
Yeah, I think so. Maybe it's hard to tell though. But there was also a big report that came out last night. It was a little bit confusing, but as I'm working my way through it, it felt like September and October iPhone production was down due to supply constraints, but they're trying to pick it back up for November through January. So it was kind of like a maybe we end up in the same spot as we would have before, but definitely a lot more choppy. So I was a little surprised to see the stock keep moving higher. But hey, here we are. I'm not complaining.
well, I don't know if you saw, but there was loads of calls coming into it as well. So obviously the big money that it's kind of like that end of the year security blanket where it's like, yeah, well, Apple is probably not going to be the one that drops heavily. And if you look, I think Juicy posted a screenshot, and you can just see people continuously just hammering Apple calls, kind of throughout the entire morning. They were looking at the 1217s, the 1223s. I mean, they were even going out a year or two here. The 120 for 2023s, there was $2.64 million of premium that came in on that, then another $5.5 million of premium. So, like, clearly it's a lot of call volume coming in from people that are taking it as a safe long-term bet here, I think, to hedge against market volatility.
Well, and those who follow like the Street's Action Alerts Plus portfolio, they took profits in the name because it was so heavily weighted in the portfolio. They took this as an opportunity to cash in some Apple shares.
Don't they read Katie Huberty and Dan Ives?
Yes. Well, but yes.
I'm teasing only because it's them. My target price on Apple is
Yes.
191, so I'm in between the two of them, I think.
Oh, yeah? What did you think of Katie Huberty's note yesterday? It cut out for a second, so I didn't hear your entire comments.
I think it's kind of forward looking. I don't know if I would have raised my target price based on that. I welcomed it. I was glad to have it. I see Tip Ranks threw her an extra half star, so she's kind of a 5-star analyst now. She had been a 4-star for a while, so she's back among the elite of the industry. Hey, and when she speaks, when a guy like Dan Ives speaks, even though he's almost always bullish on the companies he really loves, he's still not wrong. He's hardly ever wrong. I mean, I'll admit to reacting to high profile analysts when they speak or when they write. So I'm glad to have her aboard.
You don't think the note was perhaps maybe too forward looking?
It might have been. That stuff. That's kind of like what I was getting at right there. But then again, maybe they're closer to this future than we think they are. I mean, the stock is acting really well, and as I'm sorry, I got to look up your name, Miss Sir. Who was it? Gab? Was it Gab that just said that about the options contracts?
Yeah,
Yeah.
Sarge. And you can also call me Gob or Wolf. I run both accounts.
Oh, you do run both at the same time?
Yeah, it's a lifestyle.
Yeah. Well, I mean, I did see that. I think I saw it on one of your tweets actually. So, yeah, and that got me all the more fired up at the time because we know what that forces people to do. So, hey, I mean, where is it now? It's up 174, almost 175, up almost 2% for the day. Hey, and a couple of weeks ago we didn't see this coming for Apple. So, hey, very glad to have it, and very glad that I have a sizable position in this one because I was starting to doubt it there for a while. I was actually thinking about getting out of some myself a while ago. So they saved me. They saved me by moving the stock in time. The cup and handle pattern from September into, I guess, early November that looked like it stalled actually provided a little bit of a gunpowder on the retest.
So, Evan, I think that you and Stock Talk kind of hit on this when we first started talking about Apple right at the beginning of this spaces, but I kind of want to circle back and just wonder, and I'm wondering, did you have a chance to read this Katie Huberty note? And if you think it's too forward looking?
I did get to read the summary of it, the whole AR VR and then the Apple CarPlay. What was the second one? AR VR seems like the talks are for next year. So maybe that one isn't. The Apple Car 100% is. That's a random call option in the future, in my opinion. But yeah, for the AR VR thing, everything I'm seeing for that is saying 2022 or the release expected. So that one I don't think is too far.
All right, now that we've talked about Apple, I think it's time to get to more general market commentary. Evan, let's start with you. You've talked plenty about your favorite stock, but what else are you watching?
So a lot of my eyes have been there in that direction. I haven't been, putting too much to work recently. I have been sitting on my feet a little bit more. I've added to some positions, whether I had a little bit of extra money on my account and I threw it at DMYQ a couple of days ago, so I'm seeing some nice gains there. I dollar cost averaged a little bit more into Square today, as well as I was seeing that one was beaten down, and I'm kind of wanting to get back into it. The market has definitely been really hot this week so far. And, there's been a couple names that have been leading, Apple being one of them, and that's where a lot of my attention has gone so far. One theme that I've been thinking and pondering in the background, and, maybe my opinion on this will change, but there's been a lot of talk about the metaverse recently. And for me, this is one of those themes that I personally think it's a little bit too early to be investing in that. But I had a realization that, like, I do like to be early in things. And, I've had a couple names that have been huge runners recently. And, I only bought them like a year or two before they really started to run Tesla. There's a couple others in there. I was just thinking to myself, I really picture myself in 3 years loading up on some metaverse names so that in 5 or 6 years from now, we're going to be seeing some huge freaking runners there. But that was just a little empirical thing that I know isn't necessarily here. Overall, market's been running. It's fascinating to see how last week was so volatile. And now it's kind of shaking itself out a little bit towards the upside, and the direction feels a little bit more definite.
Well, Evan, you kind of queued up Stock Talk perfectly for that, because Stock Talk, you kind of find stocks and sectors that maybe aren't what's flashy and what's going across the screen when you're watching CNBC, but they do matter overall, and they will become headlines, whether it's in a week or 6 months. So what are you watching in the markets?
I have a couple names that I'm watching today. The start of this week was really good for me. I had most of my names and my swings up double digits to start the week. Planet had a good run starting today, so that was one that I've been big on. I did an interview with Nicola DeMasi on DMYQ a while ago, and it opened nicely today. I mean, we were up almost 7%, and then we got a little flush, in the afternoon, and it went red. It's just sitting kind of flat now for the day, but that was a name I was watching. That's a name that I have a lot of confidence in long term. I can talk about it for hours, so I'll avoid doing that. But it's a name that just has a very, very deep moat in the satellite imaging space. There's practically no competitors. I mean, for all intents and purposes, it's a monopoly. Back in 2017, Google Earth, which is a product that a lot of people are familiar with, basically divested their satellite program and invested 10% and purchased a 10% stake into Planet Labs. And they now use Planet Labs to leverage satellite imaging data for Google Earth and a lot of other applications. So, I think the growth doesn't jump off the page revenue-wise, but I think it's a company with a very, very deep and defendable moat. So this is one of the very few plays that I've thrown into my long-term account. It's actually not even in my trading account. It's in my long-term account. So, that's a play I've been looking at. I was also just looking at the indices in general. I expected SPY and QQQ to have kind of a consolidative day. We're seeing that, they made a red to green move, pretty steep red to green move, which was nice to see. They're both sitting, they're up like less than 0.5%. So they're both sitting relatively flat now. I like the action in IWM. I think this continual retest of this 226.50 break we're seeing. We've tested that. We tested it in the morning. We tested it again in the afternoon, and now we're coming back on that 226.50 break. Square is a name I brought up yesterday, or I believe it was the day before in Wolf's Spaces.
That was yesterday.
Yesterday, yeah, sorry. This is a name that I'm, again, dollar cost averaging in, another one of my few long-term positions, but I think a retake of 195 sends Square a lot higher. I was astonished to even see it down at 170 a few days ago. So I added a bit more in those ranges between 170 and 180. and picked up some more shares there. But I love Square as a company. Conversely to what a lot of people think, I think Jack stepping down from Twitter and coming to Square is bullish in my eyes for Square. I think he's managed his CEO ship of of Square a lot better than he has with Twitter, and I really like what they're doing with Block, and becoming sort of a blockchain integrated company. I really like the direction they're headed in with that. So big fan of Square here. Tesla was another name I took calls on yesterday. They were looking rough this morning, didn't cut them, and now they're back well into the green with this move. So those I'll probably get rid of by the end of the day. Again, I'm holding a bunch of equity in Tesla as I have been since 2016, but I continue to trade the calls. I feel like I'm pretty familiar and able to trade the price action on Tesla because it's a stock that I've owned and traded for years. So it just feels familiar and feels easy to trade. Other than that, TRT, obviously that's my penny stock play. It's not probably the only penny stock I have in my portfolio right now, but that's a play I'm sitting on as well. They had some really big developments this week that I think were kind of overlooked by the market. They're finally getting into electric vehicles, automotive and computing technologies via system level testing, which is one of the biggest differentiators they had from AEHR. So I think that that's kind of closing the gap there. I think the market will pick up on that. Institutional ownership has also gone up a lot for a stock that small. Morgan Stanley, Citadel, and Wells Fargo have all increased their stakes in November, which is really remarkable to see for a company that tiny. You typically don't see that. And institutional ownership now is up to 1.4 million shares of a tiny 2.4 million float. So to me, that's a powder keg. And of course, we've traded this name before. It had an explosive 150% move 2 weeks ago. So yeah, that's another name I'm keeping an eye on for another move up. And I'm just continuing to watch the indices, but I'm trying to trade momentum here. I did a bit of trading today on PPSI on the move up. I did not catch the meat of the move. I sold it up about 20%. It ended up running about 40%. That's fine. I don't commit myself to calling tops. I think that's a fool's errand. I think a lot of traders make that mistake of especially day traders and momentum traders make that mistake of trying to call the top. I really think that that's a bad strategy because more often than not, you'll be wrong and you'll give back gains. So I like to just take the meat of the move when I see it, but just continuing the momentum trade, watching a few key names that I'm swinging, and then also hoping for these RDW earnings finally, because I always preach about not bag holding, but that is certainly a bag that I am holding. So hoping for those earnings at some point soon, whether it's this week or next week. But we'll see. The company has not given a lot of clarity on that topic. So just being patient there. But I really like this market. I enjoy the chop. I enjoy the volatility. I also think the indices are emerging back to key levels. I think the test today for QQQ is a break of 400. I mean, we were getting there in the afternoon, kind of tapered off. Now we retested it at the 399 level. I'd like to see QQQ over 400 this week, and I'd like to see SPY over 470 today, which I think could happen. We're getting a little bit of a pop here. So if we get a SPY over 470 today and we get QQQ over 400 this week, then I'd like that. That's what I'm looking forward to. And then as far as IWM goes, I think it looks strong. And I think for IWM, the main thing is we want to get back up over that 231.50 level. And then we can kind of resume the uptrend. But that 231.50 level is important. It's a couple dollars away. We're only sitting at 226. It's another $5 move. But I'd like to see that over 231.50, whether it's this week or next week.
And just because it's been, excuse me, mentioned a couple of times, Square is still Square until this Friday, December 10th. That's when it does change to block, but the ticker symbol won't change. It'll continue to be SQ. All right, Gerg, going to you. What are you watching?
So, guys, I think great to like PayPal up a couple basis points, Snap up 6%, Apple making new all-time highs. But personally, I'm not adding anything till January. I expect markets to be choppy. I do hold all my long-term positions that I have conviction in. But in the short term, I'm just taking a break, just day trading and just swing trading. But adding nothing, I do expect on the sell-off for end of the year, so that's when I would start buying. But I did cover most of my positions that I wasn't really convicted in.
Last time we talked, Berg, you really liked Gap. Do you still like GPS?
Yeah, I think Gap is up how much since we talked about the, let's see, when did we guys meet? Last week
I
or
think it
on
was
Friday?
last week. I think it was last Wednesday.
Yeah, I think it would have been last Wednesday.
I mean, so far Gap is up 8% since we talked about it last week. And even
All
on the
right.
sell-off on Thursday and Friday, Gap was green both of the day. So far Gap has been outperforming everything, all the sectors.
Yeah, it's really
Not
sticking
Apple.
to this like seven. Yeah, not Apple. Nothing
Oh,
can
bro, like
outscore Apple, guys.
Apple is just insane. Like people are buying 200 calls for January. People expect under 15% move with Apple in 15 days. Like it's yeah. I'm not gonna say anything. It might even go higher. Like when you think Apple is done, it won't go higher. Apple is up 3%. Even the move to the right makes no sense. In the morning, they announced Apple has like pausing the iPhone production for the first time in 10 years, and the stock is up. 2 weeks ago, they said Apple can't meet the iPad demand, expects delays of months, I think 1.5 months, and the stock rallied 3% the next day. So I don't think Apple cares about the news anymore. It's just the call options pushing it higher. This reminds me of Tesla last year. Like Tesla had no news last year from I think August to January of this year. It was all call options. Same as Apple, right? The amount of premium going into these weekly calls is just insane. So in the morning, it was all 170 of calls. Now it's 180 for next week. And the people are still buying 200 for January. So personally, I don't think Apple goes to 200 to 15 by January. But the option market seems to be pricing that. So
All right, well, going to you. What you watching?
Okay, I have less setups than some of these guys. I'm looking at a few technical setups that I am really liking right here. My favorite of which is PLBY, which is Playboy. So Playboy Group trading at around 36.30 right now. I just love this setup. We talked about this on a call last night, but if you look, basically, you take the anchored volume weighted average price from the previous highs. It has formed a real nice base right around where they are. It let the 21-day catch up. It tested the 200-day and kind of bounced off of it. So I'm looking for Playboy to basically hold this 36.50 level, and then I like to move upwards from there. So I also looked at the volume, or well, the call flow for it right now, and basically everything today was bullish. So it wasn't a ton of premium, but about $200,000. Maybe a little bit more, $250,000 of premium got swept in on calls. Basically 90% of those were weeklies, or I guess December 17th, which was the earliest that they offered at the $40 level. So that's what I am eyeing. I see actually my friend Matt, Day Trader Paradise, in the crowd. I DM'd him. I want to get his opinion before I do make a move on it. And then just a couple of others. Also looking at Digitalocean. This was mentioned last night. It's responded nicely today. That's DOCN. This is, as we mentioned last night, an Ophir Gottlieb vetted company. So doing good stuff there. Again, just using stuff like the volume weighted average price, the 50-day moving average, to look at this, but liking both the fundamentals as well as the technicals on this company. And those are like the two main names. Outside of that, last week, I shorted AAL, which worked out fine because I used a stop loss. Otherwise, I would have lost all that money because it flew through this week. It flew 11%. But because I put in my stop loss, I ended up getting out of that with profit, which was nice. And I haven't made a ton of other moves. Looked at Roku this morning. Sad I didn't pull the trigger on there. A lot of people have been throwing. If you look at the call flow on Roku, there's a lot of people believing that this is going, I think, towards that 300 level. People are hammering even higher than the 300s, and they've still been sweeping in even into as of 3 minutes ago. You can look and see decent sized premium still coming in on Roku. So maybe people think that it has caught a bottom. I'm not super sure just yet. The chart is. It's tough. I mean, you got massive. I mean, the volume today was what, like 10x what it normally is. So I'm just waiting to see if this cools off tomorrow. But everyone feels happy right now with where the market's at. You're having another day with SPY, continuing, or VOO, or whatever you're looking at, to be right up near these, all-time highs by the top. So market looks healthy from what we can see. We got through, it seems like, this initial Omicron toughness. And we also heard today from Pfizer that they believe that the third dose, if you get that booster shot, you're pretty well protected against Omicron. So, it's just kind of like what is, I think, the biggest news of today for me in regards to the stock market was Twitter banning all the Nancy Pelosi tracker accounts and the stink market and all of that. That was the biggest news that I saw today was them removing our access to insider trading, and so watching that happening. But yeah, those are just some of the plays and some general thoughts on the market. But I think the other guys summed up everything else pretty well.
Gav, did you see new account though? The Nancy one is back. It's called, I think, Pelosi Tracker.
Oh yeah, I saw it.
I don't know. Yeah, I did see that all the person who ran that old account, their personal accounts and everything was suspended as well. So it's interesting that Twitter didn't only go after that account; they went after everything else they have as well.
Yeah, but how did this guy get left out? Like the Pelosi Tracker one. Like there's only
Mystery.
one account left.
Yeah, but yeah, Catherine. Hopefully that answers the question. But yeah, definitely looking at PL BY here. I think it looks pretty strong to 38. Like Mac just kind of confirmed my confirmation bias there. So I might go ahead and before close take those $40 calls that are trading at about $1.43 right now.
Gab, just taking a look at Playboy. I think I see not from the high back in April, but from the let's say late June to November. It's probably like a saucer, maybe a cup, with a pivot of 43 and a quarter. That to me would be your pivot right there. So I think a 40 call is probably a good decision. I think that's not a bad idea at all. If you get the jump off of 43, you'll either have you'll have failure at the pivot, or you'll probably get a nice move of maybe up to 20%, which could be 10 points. Just amateur opinion.
Yeah, very amateur. Thanks, Arch. I'm just kidding.
Amateur. That was okay for me to say.
I'm kidding. I'm the amateur here.
Just the kidding. Beauty of this space is having such a variety of voices. Speaking of variety of voices, Gav, I'm really glad that you mentioned Roku, because that actually is a stock that I've had my eye on all day today. Just because I've been watching it get pummeled for so long, and then we get this headline about YouTube and it's coming back, and it really is ripping and roaring from where we saw it at 205 on December 3rd. It's now at 258 today, up about 19%. And is there any way that you're eyeing that, Sarge? Sarge, are you there?
Can you hear him?
I was on the mute. No, I haven't touched Roku. I've been busy day trading Cisco, which has been it's been sending clear signals. It's been working like a charm, which is good because I've also been day trading Mongo database, which didn't work at all. I started out on the short side, and that one never really recovered, so I made it up in Cisco. Other than that, my focus is Marvel. Marvel Technology has been a real winner. Took off a partial on that one. Disney's been going the right way. I still have my core in that one. I made a little dough today on I got out of a trade, a bull call spread, 148, 153 bull call spread that expires this Friday that I'd gotten into a couple of weeks ago. So that one worked out real well. It's dragging Viacom C with it, which is real nice if you're me. Raytheon announced a buyback. Long that one. I like Raytheon. I also like Lockheed Martin, which has nothing to do with Raytheon except they work together on a few projects, and it's also one of the hypersonic missile corporations involved in that, as well as they sell the F-35, which they're going to sell about $11.3 billion worth of them to the Finnish Air Force shortly, which helps Joe Biden put pressure on Russia. So that's actually a positive, even though Finland is not in NATO. Aside from that, I'm rooting for Palantir and SoFi. Both of them got their teeth kicked in last week, and they're coming back just a little bit. And I've been frustrated by Redwire, as my friend Stock Talk Weekly is, and by Microsoft, which I'm almost always long.
Okay, and I want to welcome TSDR up here because this is your first time here. So welcome. I think we DM'd in the past, but
we have. Thank you.
Yeah. Can you break down what you're watching in the markets?
Yeah, absolutely. First, I just want to toot my own horn on my PayPal trade that, to use a little common phrase that Stock Talk likes to use, I've been pounding the table on this one on Twitter for the past 24 hours. And my position just went over 160%, and I've got runners left on the 200 calls and 195 calls. So very happy about that. But that's in the past. Looking forward, another one I've been talking about a lot that I never really got an entry in, but I'm still looking at it is Pubmatic, PUBM. It's been holding his earning gap from, let's see the date, 11/10. So for about 2-3 weeks here, between this 35-ish level to 40-ish level, and I'm not exactly sure what I want to do with this yet. How I want to trade it. All I know is that it will be a pretty significant breakout if we can get past this $44 level, which is about 10% away. So I think it is up 3 days in a row and about 12% since its low from this past Friday. But I think there will be a trade to be made on this. If you're looking back since June all the way through now at the volume pattern, it just shows phenomenal signs of accumulation on this. And this IPO base that it's been forming after its run up from its IPO in late 2020 to the early parts of 2021 is really nice. I absolutely love this IPO base formation after about a year after the IPO. So this is one that I will continue to watch going forward. Walmart. I added more Walmart in my father's long term portfolio that I run. I'm going to continue adding it. I don't think we see this break below 134, and if we do, I'll continue adding it. Yeah, I technically don't like the technical setup. I mean, it's a bear flag on the daily chart, bounced right into the 9 EMA and came right back down. But I see this 134 level as some very significant support. A couple other notable things: NVIDIA, SMH, AMD, all inside days. And holding up. I think if we can get a break to the upside tomorrow, we will have significant volatility, and I think this will see all-time highs past 346 probably in early January, if not sooner, as long as the market holds up. Another one kind of contrary that I'm looking at and going to be following is Home Depot. I'm leaning short bias on this. If we potentially break below this $400 level on it, which would it's basically been holding it up since all of December and even the end of November. It would also coincide with breaking down on the 20-day moving average. I think we could see a decent move to the downside, possibly fill this gap down to about 376. That would be a pretty significant move, but I think there's a potential short trade to be made on Home Depot. I'm not liking the way it's been rejected against about 418 to 420, and I'm going to be looking to take an options trade to the short side on Home Depot. I think that's about all I've got to say that's notable right now. I guess a lot of the healthcare sector I've been watching, haven't made any trades on this. AbbVie, Amgen, UNH, United Health. Kind of disappointed because I really wanted Amgen at about 200, and I just missed the entry. I was a little bit shaky on the market conditions at the time, and I thought there was maybe a little bit more downside on there. But this is one that I want a long term position in. And AbbVie would have been a phenomenal trade as it broke out of its base or its consolidation at about 118. And it's only $3 move, so not sexy. But if you're playing that correctly via options, you could have made some serious dough on that. Yeah. All right. Thank you very much again. And if I'd love to chime in and comment on anything else.
Yeah, please stay. I'm always excited to have more people come up here. But I do have to say, I'm disappointed in all of you because not a single one of you mentioned what I'm watching, which is GameStop earnings after the bell.
Yeah, Evan.
I'm watching
How'd
Well,
this
they're
you?
after
race.
the bell.
I mean, I'm watching them. I'm just not playing.
I mean, if I
I'm not
were to
playing with them either.
play, I would go short, but the IV is so high on the boards, it makes no sense. I will just watch it and eat my AMC popcorns.
Man, this thing, if it does end up tanking on earnings, I mean, obviously we all know this could have some room to fall. I
So I
mean,
think in the
once
long
again,
term, GME goes down 50%, but the question is when. Could be a week, could be a year, could be 5 years. No one knows. So
Well, typically earnings reactions are based on the sentiment of the shareholder base, and I'm not sure the shareholder base in GME or AMC has much logic whatsoever. So I'm not sure that I can make any predictions on the reactions of
even with the
earnings.
AMC, right, the numbers, like, they don't matter. Like, I've seen terrible earnings and the stock goes down 2-3%, but the next day stock is up 15%. Even with GME, great earnings, stocks down, terrible earnings, stocks up. Like, you can't
At
predict the
least
earnings.
the one thing
If
I
it
will
was a
say
normal
about
stock,
this,
I would buy puts, but GME, yeah, rather just watch this.
the one thing I'll say about GME is AMC and GME to me trade in very similar ways. They're all off hype and not necessarily off the fundamentals. AMC does a great job at trying to build that hype always, constantly. Have you seen Adam Aaron's Twitter account with the NFTs and everything like that? GameStop hasn't really done that. And to me, that does give the possibility of like one or two of those random hype headlines coming out of this GameStop conference call where they're getting into NFTs. The numbers absolutely suck, but there's some random hype, build up thing that they can release out there. But I'll definitely be watching the GME earnings. This sentiment against it on Wall Street is the same as it has been. People don't understand why it's there, and fundamentally, it has no reason to trade where it's at right now. But honestly, the liquidity situation, the market situation, not much has changed. I don't think this is the earnings call where GME crashes and burns, which I do think it ultimately will. I won't lie, but I think we're not there yet.
Yo, Evan, are you buying bad puts for PTH, or are you playing that?
I was thinking about it. So Catherine, step back. Trade of the week that Stock Talk Weekly does every single Sunday. My play for this week, which I don't recommend trading around earnings for anyone do it. It's not a sustainable game. This is just more for fun. But it was
No,
to
he's
short
lying. This
UI.
guy is a
That
three.
is a lie. Stop.
He's a three-time back-to-back world champion.
Yeah, he wins every week. This guy.
He wants all the games, guys.
I love how uncomfortable Evan is with me posting that. Like when I posted that he was a 3-time winner, Evan was like, "Dude, don't say it because people are gonna believe me and follow me."
Yo,
It's like,
somebody,
dude, no, you're killing it, Evan.
yeah, somebody came in my DMs and was like, "Hey, were you the one who picked that docu short 2 weeks ago?" And I was like, "No, it's at Stock Market." He's like, "Perfect. I can't wait to DM him. I'd love to learn how to find these awesome short plays in advance." I was like, "You do that."
Evan, let us compliment you.
I'm
Yeah,
terrible at
Evan, why
taking
are you
compliments,
being so shy?
honestly. But the real reason I don't want it is because the way I'm doing this and the way I'm winning is trading around earnings, which is something I am vehemently against doing for the long term. So, like, I'm kind of going against my own word. It's a weird situation for me. And the truth of it is, I'm not a short term trader. If you're following me for short term trading plays, geez, that you're probably doing. If you're following for news,
Dude, I
I
had
think I'm the
somebody I had
best.
somebody DM me that made $250,000 off your docu call. So, I mean, hey, people are banking off your plays.
Yo, he gets 10% royalty on that, right?
Yeah, Evan, you gotta make this call. But also, I just love how Evan goes, "Yeah, if you're following me, then geez."
Yo, Evan, I sold my dog and his kidney for bad puts. If I lose, the dog is on you.
The
All right,
dog's in a
let's.
better the dog's in a better place now. Don't feel bad, Evan.
Dude, why are you so? Why did you say that? That's so weird.
All right, let's get back to the market because I think every single one of you mentioned how volatile it's been, and Stock Talk, you like it. I don't, Sarge, you didn't really say whether you like this market or not. So, what's your take?
Okay, well, yeah, I flip back and forth. So as a trader, yes, I'm trying to take advantage of it. I've been day trading. I've stayed rather skinny as far as my longer term book goes. I expect this joyous week we've had to somewhat run dry later this week. We have the CPI on Friday. We got the Fed next Wednesday. Seasonality says that we usually have a week that dips about 3 weeks before the end of the year, and I'm expecting that to be next week. And then we'll find out if we get a Santa Claus rally. Because I hear a lot of folks talking about the Santa Claus rally as if this is it. No, this is not it. The Santa Claus rally comes after Christmas. It's the last week of the year into the first couple of days of the new year. So this is seasonally, usually these couple of weeks are usually more positive than they actually have been due to the fall we had after Thanksgiving. But I feel to just take a look at the 10-year auction today. All right, what was it? 60. Let me take a look here. 68.9% of the issuance went to foreign accounts. Well, if the foreign accounts are going to keep buying the long end, and the Fed wants to try to get some lift off here on the short end, we're going to flatten. Even though it's steepened a little bit today, we're going to flatten the curve. And a lot of economists I follow are predicting a pretty robust first half of the year, but a tough second half of the year. I'm getting further out, right? You just asked me about this week, right? But I see some reason for caution next year. I think futures in Chicago are pricing in 3 rate hikes next year. I wouldn't get too fired up the way we go out this December, because as I have said in the past, some folks are probably stepping away. Some folks are becoming more protective of what they have, trying not to screw up bonuses or whatever, or performances that they already have in the book. So we tend to get volatility in December. Then there's a January effect, and then we find out. So I'm more of a trader than an investor right now. Even though I'm still an investor, I'm more of a trader.
So last week we had Kenny Polcari on, and what he said was that he didn't think, as of last week, that we'd get a Santa Claus rally. Sarge, you disagreed with him. Stock Talk, I think you also disagreed with Kenny. Correct me if I'm wrong here, but do you think that we could get a Santa Claus rally still?
I mean, I think it depends on how you define Santa Claus rally. I think typically, in the years that I've been trading, and granted, I mean, I haven't been trading for 50 years. I've only been trading for 10. But in the years that I've traded, December has typically been a good month for me personally. It hasn't always been a good month for the indices, but like Sarge said, it tends to be a volatile month because you have tax-related selling, loss harvesting. You have either, that broad rally that you get some years, which you do some years get a broad rally in the indices. That I think that's what people are referring to when they're referring to the Santa Claus rally. The way the indexes are looking right now, and I won't call them, in a definitive uptrend, but, if SPY retakes, and I said it was going to retake the level today, let's see if it's there. Oh, no, it got rejected. But, yeah, see this 470 that I just mentioned earlier, the 470 level, you just saw it just got rejected there. So key level, if SPY can take 470 and continue going higher this week, and QQQ can take 400, I think the market goes, broadly goes up this month for the rest of the month. Is it going to be a rally, like an explosive rally with double-digit gainers in every sector? I'm not sure, but looking at my watch list today, there's a good number of names up double digits. A lot of SPACs up double digits. There's some small caps up double digits. So me as a person who trades, typically small, mid caps, it's good. I like this. And it looks like it could be a big rally for the IWM headed into the end of the year and some of these smaller names. If you classify that as a Santa Claus rally, I absolutely believe so. But I don't think you're going to see an explosion in the major indices. Yeah, I don't think that'll happen. So, I guess it really just depends on your definition of what a Santa Claus rally is.
All right, that's fair. I think what you listed makes a lot of sense. When I think of a Santa Claus rally, I kind of think of, at least in the last 2 weeks into Christmas, seeing all 3 indices pretty firmly in the green for at least a couple of days going into that. Sarge, do you think that's fair as a categorization of what it is?
I mean, when I first started in the business, I used to think it was just November, December, and I was put in my place at the time. So I guess maybe the definition has loosened somewhat, but for me, it's so ingrained that you really can't start the Santa Claus rally until Christmas Eve. That I consider this part of the year just the part of the year that gets a little bit crazy because, as it's been mentioned, there's some tax loss harvesting going on, as well as the guys who are stepping away and gals who are stepping away because they already have a really good year. And folks like a lot of you who provide for yourself by making a living, you're not going to step away. But some guy who's trading proprietarily for a broker dealer or accommodating customers for a broker dealer, if he knows he's already got a nice bonus, he's definitely going to try to lie low for a few weeks. So there is going to be some drying up of liquidity. Plus the clients themselves, the big hedge funds and the big mutual funds, if they aren't fighting for their survival, if they're not being forced to chase right now, and that could also add some liquidity because some of them will be forced to chase, they might step away themselves. So even when you're on those trading desks and you're calling your hedge funds trying to drum up some business for the day, a lot of them, if they're answering the phones, they're being polite. Actually, things aren't done that way now. Now they're done by IM, but they're not even responding to your IMs when you send them trade ideas. All year long, they're like, "Thank you, thank you, thank you. I don't like that, but do you have anything in this?" Even if you aren't giving them a trade idea in a name they care about, they come back with, what they are interested in because they acknowledge the fact that you've been working hard trying to get their business. Now they just won't even respond to the DM because maybe their desk isn't fully staffed, or they're just trying to, lie in the weeds. So it's for me, it's the very very end of the year that is the Santa Claus rally. You'll get a 1.5% to 2% out of the last week of the year in a normal year.
I kind of started laughing when you were speaking about what it used to be versus what it could be now, because it kind of made me think about the similarities between the categorization of a Santa Claus rally now versus like how we see retail moving the like holiday decorations out earlier and earlier. Does that make sense?
It certainly makes sense. Yeah, I mean, things change over time, and you're absolutely right. I mean, I'm older than most of you. I've been in this business longer than probably everyone you've had on, except for Kenny. Make sure you tell him that. And yeah, I mean, things do change. When I was young, I can't tell you how angry my mother got when they started putting Christmas decorations up before Thanksgiving. And now it's like you said, it's Halloween. It's even earlier. So yeah, things definitely change.
You know what this makes me think of? I remember seeing on November 1st that "All I Want for Christmas Is You" by Mariah Carey was back in the top 200. It's exactly where we're going here, November 1st. So, hey, maybe it started.
Maybe we're gonna have to recategorize rally as month. Are we gonna see a Santa Claus month? Okay, so guys, we've talked about your stock picks that you're watching closely. We've talked about the general market. Right now, I gotta be honest with you, I spent most of my afternoon looking into crypto because of this Ethereum update. And I'm wondering if there's anyone, I know that Sarge looked at Ethereum for a while as perhaps a crypto to get exposure to, but is anyone paying attention to that update?
Can you elaborate a little bit more on the update? I have not really looked into it.
So basically, as part of the Ethereum 2.0, which is where they're going to move from, and if I butcher this, I really do apologize, guys. I've just started learning about it myself. But basically, they're going to be transitioning from proof of work to proof of stake. And this is the Arrow Glacier upgrade that I'm talking about. It's supposed to go live, I believe, tomorrow. And it's interesting because long term, it does have impacts on mining, but not necessarily on investors. Essentially, it will make mining less profitable than it has been before, which has its pros and cons, right? It means that it's more eco-friendly, but it also means that it's not as profitable.
Which in theory could make it more scarce. Is that where you're going?
Yeah, because miners could leave it.
That's a good point. As you know, I've swung and missed on Ethereum 1,000 times since I started talking to you guys about it. Since you guys started educating me on cryptocurrencies, really, because as much experience as I have in almost everything else, you guys have miles of more experience than I do in cryptocurrencies and in NFTs, where I have almost no knowledge. But Ethereum, I have been trying to buy this thing below 4,000 for some time, and man, it does not trade below 4,000, or if it does, it's only for a minute. It's really an incredible chart.
So would anyone else be interested in Ethereum? It doesn't have to be because of this upgrade, but just in general right here.
I mean, right here or in general?
In general. Let's go with in general.
So for me, it crazy enough has become my largest holding. Like my cost basis is somewhere probably in the 400s, so I'm really relaxed with it, and it kind of just built into it over the last year. I'm still holding with it for the long term. I am at the point now where I'm thinking of taking out my initial investment, so I really am just macro playing with the house's money. What I've learned over the last 3 4 years in Bitcoin and crypto and everything like that is Bitcoin and Ethereum are still king. No matter what really upgrades come out, whatever happens, these two are still staying at the top right now. And it's really kind of just like there's been so many Ethereum killers, there's been so many Bitcoin killers throughout the year, and we're still here. For me, the base case is still betting on what's working. We'll see what happens in the future. So I'm still for it.
So aside from cryptos, then, what are there any stocks that you guys would avoid at all costs right here?
Nicola.
So
Okay,
one
can you
time,
expand?
wait, before he does that, I had to ask Wolf one time we were together hanging out, and I asked him, "What's one stock that I can use as like a bad example for like a bad company?" And his answer was Nikola. It's just my go-to. But step
I
back.
thought he
It's
would
all
have said
yours.
Fisker.
No, even with
Oh,
Nicola, right? Nicola is still above 10 bucks. So if you bought this back when it came out, you would still be green with Nicola. So I think Robinhood or is a better example, or even SOS. It's down 90%, or OCGN, right? But Nicola, the price that they went public at, the IPO price for the SPAC, it's still above that. And people still love to buy Nicola as soon as it goes around 10 bucks. So
I've got one. And, you know, coming from a trader, this is obviously a great vehicle to trade. DWAC, I'm talking about, but anyone looking to swing trade or invest, I mean, they're going to continue to come out with more headlines and more PRs on DWAC and Trump's media organization. But I ultimately believe that a lot of investors are gonna lose some money on this. It's I mean, at $64, I think it's trading ridiculously. Um, yeah, I'd love to hear everyone else's thoughts on DWAC.
Yeah, dude. Look at Twitter. They've proven me. If they've proven me anything, they've proved that it's hard to start a social media network, or it's at least hard to run it.
And DWAC, the Truth Social, it missed its it was meant to launch a beta in November, and it missed that deadline.
What's Fun
They're
doing? Let's take a look.
What
Funwares, that's up a few pennies, but that's 18%.
What's
So
puzzling to me is that DWAC or Trump Media is, their relationship with Rumble is puzzling to me. They said that, it was a relationship based on distribution and content provision, but it's like their social media in and of themselves, Rumble, right? In a way, a video sharing platform. So, like, what is the relationship there? I'm kind of confused by that. I know that, CFEI was moving off of that, and a lot of people were touting that relationship, but I never fully understood the magnitude of the relationship or what kind of exchange those two companies are having. They seem like competitors to me, which is odd. And I'm also really, really doubtful of, we don't have any kind of, imaging or anything of what their UI is going to look like or what the platform is going to look like for Truth Social. So that's worrisome to me. As everybody knows, and especially in these like large software developments or even in like social media developments. I mean, the reason that we only have, a handful of social media companies that are competitive at all, I mean, Twitter, Facebook, Instagram, Snapchat, and then recently TikTok. But, TikTok's penetration into that space was, random and largely based off, the fact that they had a new format for sharing videos. It's a very hard space to penetrate. There's a massive barrier of entry. You need billions of dollars and a massive software development team to, even have close to the UI to compete. I mean, we saw last year once Trump got banned from Twitter, droves of people went over to Parler and all these other alternative options. But, those products just can't compete from a software perspective. They're just not as good. So whatever people's reservations are about the control and the centralization of some of these social media networks to their CEOs or their executive teams, I can understand that concern, but I don't think there's going to be money making alternatives to these networks until someone can put together a software team, development team, and invest billions and billions of dollars into building a better UI and a better user experience as well. And I don't think that happens in the near term or maybe even in the long term. It's a tall task to compete with these networks, in my opinion. But we'll see what happens. Clearly, the stock has a lot of enthusiasm. There's a lot of supporters of his that are buying the stock in droves, and so it's a tradable equity for sure. I've traded DWAC myself several times. I've traded sympathies to it several times, like fun. I traded CFVI a bit as well. There are trades to be made there. I'm just saying in the long term, I'm not sure what kind of infrastructure they have put in place that will allow them to develop a competitive product. I don't think it's that simple.
I do completely agree with you there, Stock Talk, because people can disagree or agree with me with what I'm about to say, but Clubhouse, I mean, it was designed as somewhat of a social media network, whether or not you want to call it full-fledged or not. And look at that. I mean, it went downhill pretty quickly. It's very difficult to make an app or a website that is social media based and can not only last with viewers and with users, but remains relevant in the overall space.
I agree completely with that. You bring up Clubhouse, actually, I think just adds another layer to it. Like all these new social media, websites, whatever that are popping up have one thing in common. They have a new stick. They're bringing something new. It's, innovative. It's whatever. And Facebook has proven that it is going to steal whatever it can from other competitors in the space. Twitter takes a little bit more time. We know that. So, I think the difference when we look at TikTok, they got themselves out there as quickly as they could in front of everybody. What Clubhouse did, they were super restrictive. They were only on iPhones for a while. They let the other people catch up. And I think it proves that, even once you have a great, compelling product, which we're on Twitter Spaces right now, clearly we all think that was a compelling product, Clubhouse, there's even still so many more dangers, company dangers that go ahead that you can get destroyed easily.
DWAC is running as we're talking.
Yes, it is. It's incredible.
Okay, so I want to bring, if you guys don't mind, I just want to bring Matt up here because I elevated him to speaker, and I just want to get his thoughts on the market real quick.
Thank you guys for having me on. Thank you, Catherine. I really have, I agree with what a lot of people are saying. I think that it's going to be very difficult for the market to see any headway, I think, going into the new year. There's a lot of, the VIX so far has shown no signs of fear in the last week or so. A lot of my people and friends who I trade and trade with and such, they're very hesitant. They think it's going to be very difficult, this 4,700 level, at least going through the new year. There's a lot of sectors that are really kind of picking things up. Financials are kind of my almost go-to to see if that's going to be the strength going into this, saving the market where we are now. I've been staring at the XLF. 39 has been that key level that we've been watching. It's been strong. I think some of my plays in there, Morgan Stanley and JP, those are really good. I think that financials are going to be kind of the telltale sign if we were to pick a sector. It's really difficult seeing some of the tech kind of go all different directions. And but I honestly, I've been kind of scooping up the last couple of days, getting some really good longs, and I'm actually closing out again right here at 47. I think it's going to take about a week or two to really have us figure out if whoever was selling the last couple of weeks is still done selling. You always wait. After the pattern that we saw was very difficult to digest. It was different than some of the selling we've seen over the last year through this bull market. And it's almost kind of like when it's relaxed and we've had a couple days up, we're the only halfway done and we're going to see a little bit more of that. VIX doesn't show any telltale signs of that, and it's in pure decay. We're falling through 21 of VIX futures. It was a drop below 22.5 is just a free fall. We've got maybe 3 or 4 more points on there to go before it even hits any resistance. So I don't expect any selling this week. After Friday, we'll have a really good look on the overall broader sentiment. Fed coming up and we all know the Fed's probably going to be sitting on their hands for a lot longer than people think they will be, because there's not a lot of action the Fed can take really to do anything other than anything they do will harm the market and harm the labor market. We have to get people back to work. We have to get the ball that's slowly rolling to keep rolling. Other than that, anything that comes out that's negative news is going to be bad. I think the selling last couple of weeks was everybody digesting random news from different parts of the world at different times. And we were reacting to others and they were reacting to us, and there was a lot of selling. But now we're going to get to the pure, in our market, like what's relevant to our market, despite what's going on in China, what's going on globally with COVID. Our market's just general sentiment, it does seem like it's not bearish to me. 2 weeks ago when we were selling, I was saying that it was more like a crash and not a correction. The market, anybody that's short just got squeezed really hard. But a lot of that selling was uh, 69 is like that key level going into next Friday. If we close above there, it's going to be clean through the new year. If we don't, it might be choppy for a week or two before we get that Santa rally, which is right at the end of the year. So right on the edge. Not bearish, though.
Not bearish. Okay. Okay, we've got 2 minutes left, guys. What are you watching tomorrow?
Hey, we still got time. Like you said, I'm disappointed in you, Catherine. We still got time for GME earnings. How can we focus on tomorrow?
Sorry, I should have been more clear.
When we have the meme stocks? It takes up my entire mind. Well, my entire day is just staring at GME and AMC, so I can't think past that.
Evan, I'm cracking up right now. Okay, no, I meant we've got 2 minutes until the markets close. Well, now we've got 1 minute. All right, Gav, what's up?
I do have to pop off for a 4 p.m. meeting, but this was very fun, and I always enjoy the banter. And if you're not already, make sure that you're following both Catherine, Stock Market News, and The Street, our wonderful hosts up here who put in time to make this happen, moderate, come with topics, bring hundreds and hundreds of people valuable information. So very much worth your follows. Let's build up their audiences so we can keep this going.
Always appreciated, Gav. All right, Evan, what do you said that you don't expect this to be a bad quarter for GME, or at least you don't expect it. Sorry, I should clarify. You don't expect the stock to plummet when it reports earnings. So let's put you on the spot because I'm feeling sassy.
Mm-hmm. Yeah, no, totally. So when I look at these two names, I really think of GME and AMC together. Obviously, completely different businesses, but 2021 memes all trade together. Actually, American Express just declared a quarterly dividend of 43 cents. Sorry, just crossed my mind. I really just think the difference I see in AMC and GME is AMC really goes out there, embraces the meme, embraces everything like that. They're selling NFTs, they're doing all this stuff, they're selling popcorn, they're trying to get it out there, and I think that GME isn't really doing that. And the play here is, first of all, what's changed from what caused GME to really run up? The environment of liquidity, the retail versus Wall Street environment, everything like that. Like, I don't think that's gone. I don't see a reason why we would necessarily switch right now. And I think that the difference between GME and AMC, GME not regularly saying all those things, they have a little bit more dry powder for these type of earnings, where the company itself, I'm a self-proclaimed video gamer. I love this stuff, a gamer. Like, when I think of GME, I think of somewhere that I go to sell my $60 games for $1 and get terrible used products. Like, I don't think it's a good company. I would not buy into it, and I really don't think we're going to see any numbers or growth there. But I do think that it's not trading off fundamentals, and I don't think that matters. I think it's all the hype, and I think that we still have some room to get on the hype train.
My spaces keeps glitching, so I apologize if I'm like delayed in my responses here. Matt, do you have something to say?
Yeah, GameStop, what do they do? It's always been lately. I've had the hardest time even selling my old DVDs that I have for people, and the used game model. Ever since that Xbox One came out and everything went digital on the home front, it's so hard to see GameStop doing anything but selling T-shirts and teddy bears. And so, other than what Evan said, the meme dream is always alive, and those stocks push off of that general sentiment. The whole penny stock pump and dump thing has made its way to blue chips, but I don't see GameStop as having any future. Period. Not to break anybody's hearts, but they need a new business model, and they need to figure out something differently, because there's not a lot left in physical media. And that's always been
Ryan
my take
Cohen's
on
not
it.
doing it for you?
What'd you say?
Ryan Cohen isn't doing it for you?
I like him a lot, and I like the idea of that. It just comes down to just being, I just have this feeling there's gonna be one day that it's just gonna fall back to $40 when nobody's looking, and then people are gonna wonder why that was, and then we're gonna say, oh yeah, well that's because nobody buys video games anymore. So I don't know. I get all my games from Steam, and I every time I go into a GameStop, I love going in there for the nostalgia, and I buy peripherals, sometimes controllers, but I just realized I haven't, I don't really, that's just how I've always felt about it. In the meme, but the meme stock, things don't really trade off of fundamentals, so you have to really keep that in mind. I would never short it. I'd be scared to do so, but as far as a growth stock, I think it's kind of stuck where it is, if anything. So.
That's a fair assessment. I do actually agree with you. I still operate on a PS5, so PS4, not PS5. So I prefer to go get my games in person, but that doesn't always mean that I'm going to go to a GameStop, because I found that places like Walmart and even Target could be cheaper for the games that I'm looking at if I'm not going to Amazon directly.
I think GameStop should look to change their business model within video games. I don't know if this will justify a $13 billion market cap, but what if they, really went into esports? Like, how can we get more people in the store? What if you put on esports events at local GameStops and that type of thing? You can maybe make revenue from that and get people in the store. But just overall, the business model right now, like I have an Xbox One, and I think we're kind of in the same area. I'm the opposite. I'm going to buy all my games on the Xbox itself, because, I still have to download the games anyway when I do get the physical copy. And it kind of just works like that. If I didn't have to download the games, I would probably go to GameStop more. But even just like every angle at it, it's like just making me not want to go there.
I'm not sure anyone up here is a GameStop expert, but if anyone is, answer this question for me, because I'm not familiar.
Yeah,
How
go
much?
on.
How much of
What's
their
your question?
how much of their brick and mortar or physical assets are, like how much are they worth?
Yeah, you're breaking out. I can't hear you.
Was I actually breaking up, or are you just being sarcastic?
You're good.
Yeah, can anyone
You're
hear
good.
that, guys? The Stock Talk Weekly?
I mean, yeah, I know you're making a Mark Minervini joke. Yeah, I know. Mark Minervini blocked me, so I can't make those jokes anymore, apparently. Well, maybe I can. Maybe now I can make them more often. But yeah, I mean, I'm just curious to know what the net asset value is of all of their
I
physical
have no
brick and mortar
clue. I
assets.
haven't looked into GME since March or April, so. But just an announcement, tomorrow there will be a big short report, so watch out.
Hindenburg Research, they've tweeted something that said catch me
Yeah,
tomorrow.
it,
So
it
we'll see
drops
what
at
comes from that.
9:01 a.m. And I think almost all of you guys on top will like that. We'll love that.
So, Garg, are you going to be hosting a Spaces?
Possibly with them.
I always like when you host Spaces because they're very fun.
GameStop earnings are out, by the way. I'm seeing net sales were 1.297 billion compared to 1.005 billion from last year. I'll dig a little bit into it, but yeah, I don't know the comparables as well.
Stock's down small.
Well, okay, so while Evan's digging into it, Sarge, you are a trader in this market. Does that mean that you're looking to short anything right here?
I'm short nothing at the moment. I'm certainly not going to short GameStop. My rule of thumb for entering short positions, if I'm going to keep them overnight, is once they get to about 8%, once about 8% of the float gets to be short, I kind of back off. I don't like anything that's heavily shorted. And GameStop, I think, is a 14 or 15% of the float short. So they certainly would not qualify, and I wouldn't short something this expensive anyway. Is very, very, very expensive, to the point where, like someone else just said, fundamentals don't matter, and fundamentals have to matter for a short seller. So I would certainly back off of that. But I was trading MongoDB today from the short side, and it worked for a little while, but overall it did not work. It wasn't sending clear signals, and that's why I switched over to Cisco later in the day. Cisco was sending much clearer signals, and that's all you got to do when you're trying to churn a few bucks during the day. Day trading outside of your regular positions is just find one stock or one ETF that's sending you clear signals, and churn that baby for the rest of the day. You'll change your P&L.
Stock Talk, were you short anything?
I don't
No,
mean I
he's
don't
shorting
short.
AMC, guys. Just
No,
to comment.
I don't short names that are highly volatile like GME or AMC. But what I do is, if I am going to play short on something when I'm hedging my portfolio, I'll generally short the indices, just as a hedge. But that's just a way because I'm usually net long. So if I'm net long on my exposures and I want to hedge my exposures, I'll generally short the indices or play puts on the indices. But these highly volatile names, GME, AMC, penny stocks, mid caps. I don't short them. The RR just isn't there because they can make, big wick candle moves to the upside off of thin air. And I'm not in that business of you know, shorting names like that. So I only short names or get puts when I think there is a convincing fundamental reason for the stock to be down. That's generally when I'm getting into puts or getting into short positions. So yeah, as far as these meme names go, GME, AMC, I never play short on them. I don't think the risk reward is there. If I'm going to hedge my portfolio, I do it based on the indices. Or what I'll do is, I may just short the same positions I'm long via puts, just as a hedge. So if I'm playing them with calls, I'll just play the puts as well in smaller sizes as a hedge. But that's generally the only time I'm playing downside. And then obviously an exception to that is if I feel like the indices are in a steady downtrend, which right now I feel like they're in chop. I don't think they're definitively headed in either direction, but if in the climates and bear markets where I'm convinced that the indices are in a downtrend, then I'll flip my net exposure to net short, and I'll just go net short on the positions that I was normally net long on. So I do it pretty simply. I don't overcomplicate it, but yeah, any kind of highly volatile retail names, I never, ever, ever short.
Evan, I just looked over the GME earnings. Is there anything you want to add to that?
I won't lie to you. There's almost absolutely nothing here. It doesn't look great. It's a struggling company. The revenues did beat expectations, I believe. Yeah, by a little bit. EPS was
Yeah, they
down
did.
about $1 from last year. Last year came in about negative 30 cents. This one was negative $1.39. Yeah, I was trying to look through this one. There's there's definitely not much there. We're gonna have to see. I think this is the type of thing. Maybe they have something to say on the conference call, but yeah, it's not the nicest. UiPath just came out too.
We just saw while we were talking about earnings from GME last night. We got earnings from Stitch Fix, and we just got earnings from Rent the Runway. Neither company has impressed Wall Street. Is there any reason that you guys would look at either company?
Yeah, if AMC goes to $5, I might buy in for long term.
If
Yeah, I love their
AMC
prop
announces
work.
if AMC
Absolutely.
announces that the popcorn cures cancer, then yeah, I'll go along. But that's about the only way I
Now,
would do it.
if AMC announces mining Bitcoin, I will go long. Like, do you know what AMC should do? AMC should partner with Nikola and SOS and OCGN. They should make EV vehicles, partnering with Nikola, and use the batteries to mine SOS. Oh, batteries to mine Bitcoin via SOS, and use the crypto to make vaccines with OCGN.
Oh my god.
Like, all of these blue chip companies should combine. Don't you guys think?
I think we need like a sarcasm monitor for Gerg.
There needs to be you know what Spaces needs to do? They need to introduce like sarcasm mode where you can activate sarcasm mode and it puts like a little bubble around your speaker, and then so people know you're being sarcastic. That's a good feature. That should be coming out.
I hope Twitter's listening to us right now because they really do need to come out with this, or at least like maybe we like label Gerg as like a troll in the spaces, and that way people know.
Anyone that follows him knows he's a troll already. I don't think we need to label him that.
That's why we follow him.
And they use a popcorn steam to power nuclear power plants to make electricity. Like imagine the steam, right? When you make popcorn, there's a lot of steam. Use the steam to power a turbine to make electricity. Like they can do so many things.
They need to find a way to say metaverse.
You know, I'm looking at the GME balance sheet. It's not the worst looking thing I've ever seen.
No debt.
No, I mean cash is sizable. I mean they got a lot of inventory. They got about $1.1 billion worth of inventory, and we all know it's probably worthless inventory. But even without that, current assets are still larger than current liabilities. Lease liabilities are about $409 million. There's the answer to your question, Stock Weekly. I don't think they own many of their properties. And that is down, so they probably closed a few stores. I mean, they're probably burning a ton of cash, but they probably can burn a ton of cash for a while based on this balance sheet and not go away.
Okay, I just had a pinch me moment because I never expected. I've known, for those of you guys who haven't been following Sarge and I for that long, I've known Sarge for like, what, 4.5, nearly 5 years at this point, Sarge? And I never thought I would hear you say anything positive about a momentum stock.
Well, I look at balance sheets. You know, I'm a fundamental analyst at heart, and I've seen a lot. I looked at Campbell Soup's balance sheet today. It's not as good as this one. Campbell Soup's a value stock, right? Not if you look at their balance sheet.
What about McCormick?
I didn't look at them lately. Somebody did, though. I think I saw the headline go by, right? Was it some
the Actual Earth Plus guy?
Actual Earth Plus did something in McCormick, right? Okay.
They added a bullpen.
I didn't read that yet.
Okay, so I just invited up because I haven't.
It's not down enough yet. We're not going to.
I mean, it's down 6% so far.
Lower. We'll see. It was up 2% originally. Sorry, Catherine, you were moving on.
No, well, I invited up Pro Trader Mike because Mike, you DM'd me, and I haven't been able. I'm going to be honest with you. I haven't been able to fully read the DM because I keep switching back and forth on my Spaces tab. But welcome. And thanks for joining us.
Thank you very much for having me on the Spaces. I've been in the stock market for 30 years. I've run Mojo Day Trading for 10 years, and I'm a big proponent of William O'Neill and the Ken Slim system. I've never been out of the market. I used to get the daily. What do you guys feel about that system of picking stocks and making selection with the 7 principles?
Not this guy again, please. Like you guys
Not
might
this
remember
guy again?
it was called.
This guy gave me a problem last time at Catherine on the Spaces, man. If you could mute him, he's like a hater of me for some reason. I have no idea. I mentioned covered call writing one time on AMC when he was talking about AMC, and he thought it was the most ridiculous strategy, and I was scamming everyone.
Honestly, I'm just going to throw this out there. Gerg, I'm a fan of you. I'm just going to move both of you guys down, and we're going to swiftly move on from this space and get back to stocks.
All Catherine? Right, with that, yeah. Thank you, Evan.
Way to be professional, Evan.
You're the man, Evan.
Okay, I was not expecting the Spaces to go that way. Stock talk.
All press is good press, Catherine.
Thank you. It's been a minute, and honestly, you've been very short-winded this entire Spaces. But let's bring up ChargePoint earnings because I know that you've been looking at EV charging and getting into that sector. Talk to me about what stocks you're eyeing there.
You know, I mean, I'm overexposed to electric vehicles. I have been for a while. You know, that the benefit of that is I got in early in a lot of these stocks. Like, you know, on ChargePoint, my cost basis is $13.20. So, you know, I have comfortability there. Tesla, my cost basis is under $200. You know, Lucid, my cost basis is $11. So, like, you know, on the equity side, I have a ton of flexibility on these positions because of how early I entered. So that gives me the flexibility to hold them and kind of let what happens. And then in the meanwhile, you know, I just sell covered calls against my equity, raise profits that way, and I continue to monitor it. My view on the electric vehicle space as a whole is just that I think that any fundamental analyst or anybody with any kind of fundamental awareness understands that the entire space is very overvalued if you're purely looking at the balance sheets. The question becomes is how long does it stay overvalued, and where are the entries available for people who want exposure to this industry, right? Because the reality is that emerging industries tend to get inflated in multiples early because there's a lot of hype that surrounds them and people are looking at forward growth. And when you look at electric vehicles, right, you have 3% global adoption currently. When does that number become 10%? When does that number become 20%? When does that number become 30% plus? you know, it could happen in 5 years, it could happen in 10 years, it could happen in 15 years. And so the time horizon is the debate when it comes to electric vehicles. And so if you're a person that wants to be invested in these companies at these prices, they're difficult buys. I completely agree. Like, I'm not adding equity in any of these names at these prices. If ChargePoint had fallen below 20, I may have considered that, considered adding some more. But, on some of these names at key levels, I might do that and I might trade them. Electric vehicles is one of those few industries that I consider an inevitable industry. And I've talked about this before. There's a handful of those, including digital sports betting, space and satellites, robotics, AI, quantum computing, blockchain and crypto, electric vehicles. These are industries that I consider inevitable from the sense of, they're going to become, massive industries over the course of the next 10, 15, 20 years. The question is how quickly that happens. And that's always the big debate, right? Like, what timing your net long versus your net short exposure. Do I think all of these names can come down significantly in a market drawdown? Absolutely. But I think all of these names can rip a lot higher with good news about the industry or further adoption or further government subsidies and support. I also believe that. So, I like having exposure to these names. They're high beta. They're not for everyone. It takes a stomach for sure to see some of these names go up 30% and then go down 30%. But it's a space that I love. It's a space that I have a lot of knowledge on. I've done hundreds and hundreds of hours of research on battery technology and on infrastructure and on manufacturing and the difference between manufacturing facilities for internal combustion engine vehicles and electric vehicles. And, you know, having this wealth of knowledge for me makes me more able to trade and differentiate these companies and kind of gives me an edge to do that. And so I enjoy trading and owning those companies. I probably will continue to own most of those companies. I think Lucid, Tesla, and ChargePoint. And then on my lithium mining side, I have a stock called LTHM. It was one of my first alerts I ever put out on my Twitter page. Last year, I alerted it around $6 and $7. That stock is trading now up close to 30. I think it crossed 30 as well recently, but I mean, it had a little bit of a correction. It's a great stock, one of the only pure plays on lithium on the market. SLI will be another pure play, but they're not in production yet. Lithium mining is another space I'm very bullish on. If you look at the tapering of these electric vehicle stocks coming out of February, where everybody who was in these names in February and March remembers this. It's a massive drawdown in these electric vehicle names going from February to May. What I liked to see was these lithium mining names, while they traded down, they didn't have those kind of steep corrections, 30, 40, 50% from the highs. These names traded, on the downturn of the market, these names traded 8, 10, 12% down from the highs, which, obviously no one likes that either, but it's much more preferable to seeing the names that collapse. So I think there's a little bit more price strength in the rare metal mining names. And I think a lot of that comes from the fact that, there are other use cases for those metals, right? I mean, primarily, you're going to see the lithium industry explode primarily due to electric vehicles, but there's a number of other use cases. And we're fooling ourselves. Sorry, I cut out there. Can you hear me?
I can hear
Yeah,
now.
we're fooling ourselves to think that battery technology is purely a play on electric vehicles. It's not. this might be a bold take, but I really think energy storage systems, consumer energy storage systems, and utility scale batteries. So, for those who don't know about utility scale batteries, Tesla's already done this, where they're creating utility scale batteries that can facilitate electric infrastructure for entire communities, and if they get big enough, for entire cities. So, I think the energy storage industry is something that is really largely overlooked. Even if you look at Tesla and you look at the valuation models by most of these big banks, I encourage a lot of you who are in these names, especially if you own Tesla, go read the valuation models and the analysis from all of the big banks. And what you'll see that is overwhelmingly overlooked is the energy storage business. Tesla is a world leader in that business. I think they have by far the best energy storage products, especially on the consumer side, but definitely on the utility scale side. So the utility scale side, I mean, they have almost no competition. On the consumer side, they have some competition, but I still think their brand power and the efficiency of their consumer energy storage systems is best in class. I think other electric vehicle companies are going to penetrate that space as they realize that there are more use cases for this battery technology. Lucid has already purported that they're going to do that. They've already kind of unveiled their energy storage vertical. And I anticipate that maybe even some of these legacy OEMs may attempt to enter that business as they develop their own battery technologies. I mean, we're seeing Ford, we're seeing GM spending billions on battery technology. So I think there's a ton of tailwinds for this space, despite the elevated valuations. I think more and more government money gets poured into this space over the next few years. I think more and more corporate reinvestment comes into the space. I think you see more M&A, more consolidation, and it's a space that I think is going to boom. So I'm staying exposed. Like I said, there's a handful of stocks I like. For those who cannot justify to themselves fundamentally to enter the OEM names, so like your Lucids and your Teslas and your Fiskars and all these startup EV companies, if fundamentally you can't justify getting into these names, there are other exposures. Look at battery companies, look at the pick and shovels, look at lithium miners, cobalt miners, nickel miners. Vale for a while was corresponding very well to the electric vehicle industry because they're the biggest nickel miner in the world. Nickel, for those who don't know, is critical for large-scale batteries. So when you look at vehicles like semi-trucks or class 7, 8 vehicles, utility vehicles, they all need nickel in the batteries. So, if people do the research and look at the materials and the pick and shovels that are relevant to the industry, there's a lot of places to put your money if you want exposure to electric vehicles without directly owning an electric vehicle maker. So, I mean, Catherine, I can talk about this for hours, but that's a general perspective of what I'm thinking now.
Yes, you can, and I love it because I always learn things, and I always have stocks written down that you're watching. So I did miss a couple. I'm not gonna lie because there's a couple there. You're just shooting them off, but you did mention Lucid ChargePoint, OEM, so Ford, Tesla, but what it sounds like to me when I'm listening to you speak Stock Talk is that this is almost a must own if you want exposure in this space, especially in the next 10 years.
I think over the next 10 years, if you don't have some kind of exposure to electric vehicles, I think you're missing out. I mean, that's not financial advice, but for me, it's, people don't realize there's so much media coverage. These companies have become so big. Tesla's $1 trillion company now. You have, Lucid, 75 billion. You have Rivian, 150 billion it reached. Like, you have these companies valued at these crazy multiples, and it tends to create this illusion, especially in the retail base, that, oh, this is a fleshed out industry. This is an industry that's like hit its peak or whatever you want to say, but that's like just patently untrue. 3% global adoption. I keep hammering that. I feel like I say that every space, but that's what people need to realize. These companies are valued where they are with 3% global adoption. What happens when we have 20% global adoption? What happens when we have 50% plus global adoption, right? Like, where will the market value the growth of these companies? And another thing that we don't know, and that the analysts don't know, and that the big banks don't know, and that I don't know, is how much government money, like, if you say now, and this is just me throwing out a number, this isn't an accurate number, but let's say right now you said the global government investment per year in electric vehicles was, let's say, 250 billion. I don't know what the number is. Let's say it's 250 billion. That's at 3% allocation globally. What happens when we have 20% adoption globally? Does that number quadruple? Does that number 10x? We don't know, right? And so I think there's a big question mark around what the global investment picture will look like with regard to electric vehicles, especially from the government side. But if you have Ford investing 15 billion, GM investing 30 billion, Volkswagen investing 15 billion within a year's time, where do those investments go? Do those 5x, 10x, 20x on top of the government money that's coming into the space? And at that point, at that juncture, will these companies look undervalued or overvalued? And I think that that's the question to ask. And obviously, there's a lot of predictive and speculative, gas there. But the reality is that's the way it works with emerging industries. If it was this easy to buy into an emerging industry and sit and hold, everyone would be a billionaire. But the reality is you have to sit through the volatility. You have to sit through the market's reassessment of these names. Do I think next year's multiple compression headed into interest rate increases is going to, yes, I believe that it probably will. But the reality is that, despite that, if you want exposure, it's going to be hard to find an entry point in a lot of these names if you're looking at it as a long-term investor. If you're looking at it as a trader, these names are absolutely tradable, and they have been for a long time. Volatility is always tradable. So if you're looking at it as a trader, that point is moot. But if you're looking at it as somebody who wants long-term exposure to the electric vehicle space, it's going to be hard to find an entry, because even with that multiple compression that's coming next year, there's no telling how far down these names will trade. Will Tesla trade down to a 700 billion valuation, or will it trade down to a 900 billion valuation? Who knows? We don't know how far these names will taper down, because there's a lot of enthusiasm and will to own these names. I think the best evidence of that recently was the Rivian IPO, where we see, and granted, there's some, it's difficult to say if they're being genuine or not. The banks that came out and rated Rivian overweight, because a lot of them underwrote the IPO. But the fact that there's institutional interest in these names, the fact that there's institutions willing to buy Rivian over $100 billion valuation, that to me speaks to the appetite of the market. And I think that the fact that there's so much of a growth runway for this industry really puts people in a peculiar position from an investment side, because it's going to be difficult, again, to find that perfect ideal entry.
I do want to just jump in really quickly. I want to get TSDR and Matt's thoughts on your comments, Stock Talk. But before we do that, I did see it just crossed the wires that GameStop did disclose an August subpoena from the SEC. I haven't dug into it yet, but I wanted to let you guys know. TSDR, listening to Stock Talk's thoughts on having exposure to EV, do you agree with that? Do you think it's a must-own for your portfolio?
Oh, 100%. 100%. I mean, how can you not? And mind you that I'm primarily a trader. So, these have been, my favorite sector over the past 18 months. And the real switch happened, in February, when, they all kind of had a, significant drawdown. And what I've loved is the dichotomy between a lot of the companies in this space, where you've seen, certain ones die off, not necessarily die off, but not recover, the Rides, Workhorse, HYLN, etc. And then you've seen, these other ones emerge, Lucid, not newly Rivian, and etc. Even Fisker has held on pretty well. And yeah, one of my favorite things that Stock Talk said was talking about the drawdown earlier in the year, and noticing the lithium mining stocks, their relative strength, or less of a pullback during that time. Something that I noted, gave me time to load up on LTHM and LAC. He didn't mention LAC, Lithium Americas, which is one of my favorite ones to trade. I don't know much, fundamentally about the company, other than that it's traded very well. But yeah, I mean, if you haven't traded these based on fundamental valuations, or based on just the volatility, you've missed out on some serious potential.